Laura, welcome to the show.
Thanks for having me.
So, when we first spoke, I believe it was February 2019 or something, and KYC and financial compliance were not as exciting as apparently they are today, but they were very exciting to you. So maybe you can talk a little bit about the evolution of your market since we met back then.
Yeah, sure. So I think, we started the company in 2015, and if compliance and fraud and all this stuff wasn't exciting in 2019, it definitely wasn't in 2015. And looking back on when we got started, we were sort of early, probably too early, and we were lucky to have kind of hung on long enough to make it work. But our company was born at a period where FinTech was in a little bit of a lull. Consumer FinTech had kind of had its moment in the sun with the alternative lending boom, some payments companies, Venmo, et cetera. And then things kind of died out. And that's when we started Alloy. Not on purpose. I think we just sort of didn't have the broader market context. And we're solving our own kind of like our own problems, not thinking about, how big the TAM was. And since then, I think, 2015 to 2017 still was a little bit snoozy in FinTech. There wasn't like a ton of new stuff being built and launched. And then we started to see things change. I think the market picked up. We saw banks increasingly trying to digitize themselves. And they were doing that both for themselves as a way, in a kind of M&A hungry bank environment where there's a ton of consolidation. They're all ultimately like 99% of the market, of the bank market, is competing against the top 4 banks in the country. They're all trying to digitize. The ones who are regional are trying to go kind of national, and the way to do that was to be digital first, or at least offer digital options, which many of them had not. Then we also saw, I think, banks starting to pick up on what FinTech companies were doing. And back then, their narrative was FinTech companies are coming to eat your lunch. You better figure out how to offer great products like FinTech companies do, great consumer experiences, blah, blah, blah. Now I think the narrative's changed. And I think 2018, 2019, we saw some of that happen where we saw banks actually really try to partner with FinTech companies. It was less competitive, less saying, okay, it's us versus them, and instead saying, we have something really special. We have, a bank charter. We are allowed to do these things. Products, a balance sheet. But FinTech companies have often sort of better technical talent, better product minds, better UI, all sorts of stuff, right? That we all can kind of agree for the most part is true. And so I think you saw that really start to take shape in kind of 2018, 2019. And so I think along with that, with the digitization and then with new business models, new offerings, just new products we'd never heard of. Like think about now everyone's doing some form of, not everyone, but lots of folks are doing some form of like self-lending. I remember when I first heard of that in, 2016. It was like such a brand new concept. I think the one company was doing it was self-lender, James Garvey, at least as far as I know. And now you see lots of products, and that's true across all sorts of different segments and offerings. So I think just the needs around modernizing your stack, whether that's your compliance stack or your fraud stack, started to just grow. And unfortunately, we've just been stuck in this environment of having built a compliance and fraud system, for lack of a better word, that was based on in-person transactions. It was really still based on this environment where I walk into a bank branch and you check my ID and I'm sitting there and I'm more or less held captive. And so it was, I think with the evolution and more business models, more things, more interest, more money flowing in, that's when we sort of saw the interest in modernizing those stacks and therefore kind of identity at its core start to evolve. COVID in 2020 then just completely accelerated all of that, right? Bank branches were closed. My mom started using Venmo. We got to, it was all of a sudden, we got to figure out how we're going to do this digital thing. We've maybe, we had banks calling us saying, hey, remember I had those digitization plans on our roadmap for like 2025. Actually, we had to
Dial
go
those
down.
up.
Yeah, yeah. So I think that really changed. That just accelerated what was already kind of in motion.
And and maybe I was late to the party, but I suspect I wasn't because I'm pretty deep into fintech these days. But I mean, I'm seeing sort of like KYC market maps now for the first time, and like people are engaging with them on LinkedIn. So I mean,
Yeah.
maybe for some other folks that aren't as deep into it, what does Alloy? Where does Alloy sit as an orchestration layer in that stack? And maybe you can't say this, but maybe where could it go from here,
Yeah.
building upon itself as a platform?
Sure. Alloy's position on the market has been that there have been and increasingly are a ton of great point solutions in both fraud and compliance, probably more fraud than compliance, right? There's lots of different companies who are creating like a new biometric technology for something around identity or a new database of some kind. Some of it's like really unsexy. Some of it is like just going to state by state and going to various, courthouses and gathering documents on businesses, for example. Some of it is more technologically advanced. Some folks are making new models. So our position has been that there were a lot of those companies, even when we got started, there were enough to sort of say there should be an aggregator of this type of data. But there's way more now, and every month we're seeing more of those, and it's great for the market. But as a fintech company or a bank trying to access those new products, those new models, those new technologies, it's really hard without a platform like Alloy that can put it all in one place and build and be the sort of orchestration layer, puppet master, if you will, that controls how you access that data, what rules you want to apply. It lets you test them. So you can say, I actually want to test this, A/B test this one against this one and see which one performs better, which one leads me to higher conversion, which one leads me to lower fraud rates, et cetera. And so that's really our position in the market is we sort of play nicely with all of those providers. We want them to exist. We want that competition to exist. And then we can exist in this place where we give our customers sort of the best of it.
And what's that mean for headcounts? Because I think when we started our journey together, for us it was, yes, Alloy unlocks new market demand, super important. That like will get you across the finish line. But for a lot of institutions, we thought it was going to be a fairly straightforward sell because you had a lot of people doing this with email and Excel sheets, pen and paper, and no software around it. And with the sort of uptick in scrutiny and sort of an increase in fines for financial transgressions, like does that cost savings play still? Does that ring true? I mean, how do you think about that piece with your bank partners or your fintech partners?
Yeah, so I think like with the advances in automation, it's I think compliance sits a little bit distinctly from fraud, right? And we play in both, so I think just making that distinction is helpful. But in compliance especially, automation helps a ton when it comes to just the vast amount of things to consume, right? If you're looking at verifying, onboarding a business for some sort of financial product, you might have tons of documents that you're looking through, trying to identify ultimate beneficial owners, looking at, or if you're trying to do some sort of credit assessment, right, you're looking at just dozens of pages of financial statements, for example. And there are places like that where I think automation can play a big role. And we're seeing that already play out. Even basic technologies like OCR, right, are still really relevant in that space. We don't think necessarily will ever be fully automated. We think that there is a lot that where the stakes are simply too high.
Yes.
Where the industry is still somewhat conservative, and where human intervention, whether it's sort of objectively necessary or not, plays these roles around giving auditors, regulators confidence. It helps you'd have humans sort of determining the strategies that you're employing, making sure that your edge cases are being treated properly, a lot of this involves judgment, right? Very
Yeah.
few things in the Bank Secrecy Act are actually like super cut and dry where rules are strictly applied. There's a lot of human judgment that goes into it. Um, so I think we'll see sort of like a hybrid approach kind of
Yeah.
at best, but nonetheless, we're starting from a very low bar of automation. And so there's just a lot to do still.
And I think I'd probably lose my job as a VC if I didn't talk a little bit about AI during this conversation, because you did mention documents, which has left a little hole for me to talk about LLMs.
Sure.
Do you see that as being a powerful use case here, or do you see the kind of consequences of failure being a little bit too high for that to get widespread adoption today?
It's a really good question. I don't have a great answer. I'm curious to see what happens. In general, I feel like the consequences are quite high, like
Yeah.
really high for compliance in particular. I see it playing a bigger role in fraud. It already is playing some role in fraud, but I think the industry will just have to figure out first how to even work with some of these companies and models. Like you see, like chatbots are being adopted. I see that sort of step one, like let people get used to the idea that this is people meaning companies, let banks, let's say, get used to the idea this is happening and figure out how to adopt them and how to work with some of these technologies, how to understand how to separate their data where they need to, just sort of architecturally how you figure all that out and kind of grow into it. I do think fraud will be the first or kind of the next stop when we're coming to critical issues, critical decision making. I think those sort of LLMs and AI and all that stuff plays a bigger role in fraud than it will compliance. I think compliance is one of the last stops. For now, I would love to see that happen, because I think also when you're talking about humans, you're also talking about human error, right? You're not just talking about good judgment, you're also talking about human error. And so there's lots of places where I think it still makes sense, but it'll be a balance.
And so you've mentioned it a couple of times, so maybe we can dig in a little bit in that, how you might differentiate the fraud and compliance use cases, because you've talked about fraud being at a place which sort of on a relative basis is more software friendly, compliance having a little bit of ways to go. So, what are you hearing? And you did point out correctly that I think the risk around fines related to compliance violations is a little bit higher. How do you think about the way your partners are positioning themselves as an Alloy partner, or just generally when it comes to regulators and what they're doing as far as meeting compliance requirements?
Yeah, a lot of what we saw, and this was true in the evolution of the Alloy product as well, but a lot of what we've seen be important to them is what I would sort of call like transparency or auditability. So it's less so, did you make the right decision? Did you let Laura on board and do transact and you shouldn't have? And it's more about can I show that I did the right thing? I took the right decision. I took the right steps. I gathered the right information. I looked at all the right places. I had the sort of right protocol for onboarding Laura. And even if the decision ended up being bad, here's my sort of paper trail on how I did it. And so I think a lot of the focus when it comes to software is around those elements: auditability, transparency, paper trails, and making that really easy. A lot of the workflows that we see our clients, compliance teams, and analysts having to employ are, and again, this is where the bar is set fairly low. It's like they're going into 6 different systems to investigate something. So again, it's not necessarily improving the actual outcome. Like, we're not saying you're making bad decisions and we're going to help you make better decisions. It might be part of that, but really it's like, make your life a lot easier. Go into one system, don't go into 6 systems. That's crazy. So I think it's just a different approach that has a sort of different metric, a different success metric attached to it. A little bit less about decisions, and our clients we're a little, it's like self-selective in the sense that we don't have a ton of clients who are starting from a place of non-compliance and coming to a place of compliance with us. They're all starting from a place of compliance. It's just how easy we make that for them and how good of a customer experience we make it for their end users.
And I think I asked this earlier, but we got stuck talking about fraud or compliance. So maybe you could talk a little bit about some of the things you're working on at Alloy that your partners are really excited about, that you're excited about releasing. Be they an AI powered real time credit decisioning engine or a better compliance workflow?
Yeah, so I think there's probably three things I'd point out that I'm excited about. So one is that um, we spent the last year starting to expand internationally, and that was kind of for two reasons. One, we are, you know, aware of sort of other ecosystems outside the US being important for fintech. London being a really big hub of fintech, a lot of great companies being built in and around Europe right now, and we wanted to be a part of it. So that was one reason. Second reason was a lot of our clients, especially big sort of enterprise fintech companies, were going multinational, right? And they were saying, okay, the Alloy value prop is that like you do a lot of these integrations for me, you help me scale, I don't have to go build my own risk engine in every single place. You know, do you support me in England? Do you support me in France? And so we started building out some of that to kind of support them and to extend the value prop, the existing value prop for some of our clients. So that's one set of things I'm really excited about. I'd also call out our kind of shift from being onboarding only focused to serving the life cycle of the customer. So now, instead of just saying, you know, we're going to help you make onboarding decisions better, everything you do after that is on you. You no longer involve Alloy. We have built our product to really serve the life cycle, and that means making different kinds of decisions, like including credit decisions. It also means 8 months in, when their user is, you know, pulling out to eight buckets of money from the ATM at one time, or when they're going in and changing their address on their online banking profile, we are helping you kind of flag that risk if it's a risk. Mm-hmm. We're helping you make a decision about whether or not we think you should let them do that stuff. And again, kind of extending the value prop. And so that leads me to the third thing that I'm really excited about, which is kind of our own model, our own AI ML model. A lot, and it feels silly because a lot of what we say is like, in the AI world, we get this question quite a bit. Like, we're ultimately this sort of mega model, or, you know, we work with all these different companies, a lot of whom have their own models, and we sort of are this mega model. But we actually do have our own model in this one specific thing, and our kind of unique strength here is that we have onboarding data. And so a lot of what people have is making models or making decisions, you know, providing scores, let's say, for transaction monitoring. Like, I'm watching all of your transactions and here's an anomalous one, and so therefore I think you shouldn't let them do that, or I'm downgrading their score because this one looked weird. But they don't have onboarding data, and onboarding data is important because it's like this really rich identity data ultimately. Mm-hmm. And we're marrying the two things. So we're saying, let's take onboarding data, everything that we know about you, which is quite a bit that we learned during onboarding, and now let's take everything that we learned subsequently. That could be transactions, but a lot of it is non-monetary events, like going in and changing your online banking profile, linking up your bank account, right? So you're going in, you're going to open a new account, now you might link it up with a tool like Plaid. So lots of little moments that happen in the life cycle of the customer that we now can capture and feed into our understanding of that customer, with kind of supplementing the onboarding data. And so I think that's one of the things that I'm excited about that's just really powerful, because we've seen that it can have these like pretty incredible outcomes. In some cases, we've been able to reduce manual review volumes by 25 to 50% by using this kind of model, because we're able to help you optimize your workflows over time.
And I mean, what jumps to my mind are sort of lookalike models that you'd build based on someone's onboarding. So if they look like this when they onboard, they might behave in this way in 2 years. And if they look like this when they onboard and then they did this, they might be about to have a baby. Are your customers asking for that? Is that feasible, or is that sort of like hand waving?
No, that's exactly sort of what this part of this provides, is that we don't share our PII across the network, right? Yeah. We don't see, I saw Laura over here and here's her address, and therefore when Laura applies over here, that's not her. But we are saying, I saw someone who looked like Laura and she ended up being fraudulent. Let's be careful with this profile. And so that's exactly what we are providing in kind of our our models, and then our actual workflows. So we constantly update our best practices. It says, here's how we think you should, properly onboard a small business customer for a credit product, for example. Constantly updating these best practices, and those really incorporate what we see will be the latest and greatest on, what to do, what not to do, to try to kind of optimize for customers you want.
And could we talk a little more about the international expansion? Because I think for one of the ways that FinTech, there's a few ways that FinTech and SaaS are different. One, I think, is like more transaction-based pricing, more value-based pricing in financial services or FinTech. The other, I think, has traditionally been, well, it's a different regulatory regime. So just because, people are loving Monzo and dressing up as Monzo cards in the UK, doesn't mean you can just open a Monzo card in the States, or that you'd want it because it has the same features you want here. So I'd love to understand a little bit of what that journey's been like. I mean, obviously you have Edwina, who's like a secret weapon killer, which would help, but talk about that.
Yeah. So, can you hear me? Yeah. Okay, cut out for a second. That is the hardest part of what we're doing, right? Is we're going into these markets where you can't just copy paste what you've been doing. And so we spent quite a bit of time with our existing customers with kind of doing discovery on the ground in various markets, saying what is the sort of best for onboarding, and not just from a how do you stay compliant, but really like when you look at all the data available, for example, what providers have the highest coverage rates, what are consumers used to, what are they willing to do and not do. And so I think all of that kind of marries together, and some of the markets are more like the US and some are less like the US, right? And we see markets where you have to do video. Germany, I think you have to provide a sort of video attestation almost, right, when you're opening an account. It's a very different experience. And so our process was like go deep on, we had our product team, we had our team in London, sort of dedicated to figuring out exactly what the requirements were, but then also what would satisfy those requirements in a way that meant we'd have high coverage, we'd have a good customer experience, et cetera, et cetera. And so that's where we've landed. It means we don't have every country in the world covered, but our whole MO from the beginning of Alloy has been go really deep, not wide. And so there are providers out there who will give you some degree of coverage in 180 countries, and that's awesome. But if your market is pretty heavy in one of these markets, like you will suffer, your customer experience will suffer greatly if you don't have great coverage, and if you don't have sort of backup data sources, right? If you just rely on like an ID scan for every user, that's not, and you don't need it, that's a bad experience. So
I mean, if you want to be a serious financial, if you want to be a serious financial institution, you obviously have to work with Alloy. Otherwise,
That's exactly right. That's exactly right.
Well, Laura, you've been very generous already with your time, and you told me you had a 2:45 stop. So my gift to you for today is 20 minutes of your life back.
Oh my God, amazing.
But thank you so much for your time.
Thank you. Thanks for having me. It was fun. I'll talk to you soon.